to week 10 of my Trading for a Living challenge, where the goal is to make over $53,000 in 52 weeks on a $125,000 account. And I'm doing that by doing the wheel strategy, which is selling options. So selling puts, if I'm assigned the shares, I then start to sell calls. And again, there's links to that down below if you're new to the wheel strategy and selling options. So in this video, what I want to do is go through week 10, how much money we've made, and spend a bit more time on the trades and the charts, especially Meta. Meta has again tanked this week, but I'm still lowering down my cost basis and still trying to minimize my losses in that particular trade as well. So if you are brand new, playlist is down below, goes through every single video that I've done so far on this challenge. And make sure you subscribe, like, comment. Appreciate all of that, and let's get right into it. So as I mentioned, market again has gone down again. Tesla, which makes majority of my income, and then there's Meta. Meta is causing me some challenges, let's put it that way, as it continues to fall, which is eating into the profits I'm making every single week. So at the moment, you can see for week 10, it's not the biggest gap, it's the second largest gap that we've had since we started this challenge back in week 3. So we made 651 with the goal of 1,029. And again, I spent a bit more time on this because just looking at Meta and what is the best thing to do, and we'll go into what I have done for Meta in this video. And if we look at where we are year to date, we've accumulated 8.8 thousand, where a 9 to 5 job will get us 10.2k. But again, you are saving, a lot more time. Where in this whole challenge, I've estimated that I've spent about 7 hours compared to a day job that would have taken 400 hours. So you could have easily got a part-time job or something else to supplement your income as well as doing this on the side. So the gap is getting bigger. We're at 14% now, where again it around the same of where we were in week 3, $1,400 there. I just need one good week. Just one good week on Tesla will get me out of this. But I'm still managing the positions. And as I mentioned in the last video, it's all about rolling down in strike and out in expiration for a net credit or minimizing your net debit. And that's what I've done in this video, this week, sorry. And we'll go into the charts and everything in a second. But let's review the trades that I've done. So we're going to start with Meta this week because that's where the majority of the activity's been. So last week, for those of you who remember, I had the 160 put. I rolled that down to 157.50, so rolling down my strike, and it cost me $250 debit. So I paid $250, and what I decided to do with the cash I had available is to open another put option on Meta at the 135 strike for 194. So my net debit effectively that I paid was $56. So I used the premium for this new put option to offset the majority of the debit in week 9. And I've done exactly the same thing in week 10. But before I go into week 10, is if we have a look at Meta, over the last month, it's down 16%, right? It's not going good for Meta, and it hit lows. If I go to the 5-day chart, it's down. It looks like it's not that bad, only 2%, but it hit lows on Tuesday at $134, where it opened at 141. It went all the way back up to 141, but it dipped back down and slightly up today. I think it's up today. It's pretty much lost all its gains already and already starting to go back down. But we kind of are where we are with it. So I have to manage this position. So what I did, looking at the 135 put option. So Meta now is currently trading at 137. So what I did is I kept the same strike. So I bought it back. So I sold it for 194. I bought it back for 104. I probably could have rolled this put option today and probably got a better deal because the buyback would have been a lot less, I would imagine. I don't think Meta will go to 135. We've got about 2 hours left till the market close, and I rolled it out for a week for 330. So I made $226 net premium from that trade. However, I've still got this 157.50 put that I opened in week 9, which was expires today, which is Friday, September the 30th. So what I did yesterday is, and again, all the screenshots are here, so you can kind of see what that looks like. Is I bought that back for 1800 or 1840, so that was a loss there, so of 105. But and what I did is again I rolled down in strike, so by another $250 to 155, and I was able to get 1590. So that again was another 250 net debit, exactly the same as last week where I took another 250 net debit. Um, didn't really gain anything in terms of taking risk off the table because it cost me 250 to roll down by 250. So not that great, but we are where we are with that. And then and again, I made this 226 net premium from that from the 135 put. So if I take everything, my net debit is $24, which if we look at my overall net debit for last week was 56. So if I take week 9 and week 10, I've paid $80 to roll down from 160 to 155. So I've taken what's that, $500 risk off the table for the cost of $80, which is a good move, assuming Meta does not drop way below 135 next week. Now, if we look at the chart, you can see here that we've got the 155 put over here, and we've got the 135 put as well, both expiring next Friday, October 7th. And we are pretty much at the money here, 137 to a 135 put. However, we do have, if I zoom in on this slightly here, you can see here, you guys know I love my pivot points. Obviously, next week we will see what October's pivot comes up as, but we have two missed pivots here. One, two. I'm expecting over the next 2 weeks at least this one to be hit. So I'm expecting price to get back to 143. It went to 141, at highs. If we look at the last 5 days, it went to 141, 140. So, and you can see that here for these two spikes that we've had. We've been fairly close, this one and this one. We've been close to that pivot point, but we've just not yet hit it. So I think we'll do that. And what I'm looking for is what I should have probably done is when it gets to around this pivot level, I'm going to roll this option. I'm going to roll it down because this option will depreciate in value the more Meta jumps up in value. So then what we're going to do there is hopefully roll this down for a very small net debit, or even hopefully break even to a small credit. Then I'll be able to roll this option for a nice little premium, which will add to my overall balance instead of taking away from my overall balance from there. So, again, we are, in these oversold territories. The market has gone straight down. It has to consolidate for a little bit, and it might continue going down or it might continue going up. But these two pivots are my saviors at the moment. We are overextended. We've got the short term and the long term moving averages all pointing to red. So I'm at least expecting some sort of range out there, which will allow me, even if I have to pay 250 again, but I can use this put option. Worst case, we do not want Meta to keep going this way. If it keeps going this way, I'm going to be in trouble here, especially with this 135. This 135 will put me in trouble. So I could have gone further. I could have gone to the 130 and taken a higher net debit in total. But for me, I'm confident that I think Meta will range, not go too much lower, not too much higher. We've got earnings coming up as well. When is that? When is earnings? Earnings is due on the 2nd of November, so we've got a whole month to go until earnings. So I want to really be in a better place. But if I can continue rolling this down, and I've talked about this enough on my channel as well, is is if your strike continues to go down, so this is your strike, and then price continues to do this, and then does that, you just really need to get to that level there, and then you can do a nice roll and put your strike down here. So that's what we're trying to do. We're trying to get the strike closer to price. We're doing it slowly, while hopefully we're expecting price to at least range to do sideways to up, and our strike to go down to hit that moment there. And that's how you manage these positions. Um, I'm fortunate enough that I do have money. I didn't invest the money that I had remaining inside the account to pay for this net debit. If I didn't have this 13 grand, then we would be in a bit of trouble. But thank goodness I've done this in such a way in terms of how I've kept that money on the sidelines if needed in this situation. And when did this start? This started really around September 12th, right? So if we go back here to September 12th, I just want to show you something here. So pretty much till here. So if I look at all of this, right, we've made $22 since September 12th, and the price of Meta has dropped since the highs of 165 to lows of 134. So even though Meta has done this, we have still made money in this position. We're not out of this position, but I'm just showing you that you can manage trades without accepting assignment. Ultimately, I will end up accepting assignment at some point and start selling covered calls, and that's a different ball game, and we'll talk about that when we're there. We're not there at selling covered calls, but I just wanted to spend a bit of time on that Meta position so you guys understand what is going on. And then more very easy in terms of Tesla. Again, I managed to roll out in strike, or out in exploration and down in strike. So we sold the 285 strike. I bought it back for, again, Tesla's tanked as well. Where are we now? Tesla. Again, look at that. That bar right there really screwed me over yesterday on the 29th. I think it was down like 4%. I was doing very well. I was out of the money, came back. Again, look at this. Look at this from a pivot perspective. This is why you guys need to get into pivots. I keep talking about this, but you know, look how we ranged down and we came straight back up to the weekly pivot and then back down again. See how that was support? If I could, put my pivot level or my strike there, that would have been a nice place there for me to potentially roll. But again, I was out the money for a little bit, and then yesterday we had this tank down. I think that was down to the Bank of England, and the pound dropping and all that stuff spooked out the rest of the market. So again, not great. We've got a bit of support at this level over here where we are. We're at 267. Are we down? We're down. It's a flat day on there. But this again caused me a problem. That's why it cost me 5 grand to roll this, right? But then I managed to sell the three puts for 5.8. So the net difference, I made 675. And then obviously we took the 20 odd dollars debit from there, got me the 651, which is what you see here today. So Tesla again is all of the income. Meta is actually not making me any money over the last 2 weeks. It's costing me money. And that's why I've utilized that other put. But hopefully you guys are trying to understand here what's going on. If worst case, if Tesla starts tanking, then this would be a big problem. I would then accept assignment and start selling covered calls below my cost basis. That's the only way I can continue to make decent amount of premium in Tesla on three contracts. So I think that world will be quite interesting for you guys once I take assignment. But again, I'm doing this as if it was my real money. Accepting assignment is what I'm trying to avoid at the moment. And if I do accept assignment, I'll rather accept it at 155 than at 160, than at 290 to 282. So again, rolling down my strike, rolling out in expiration for a net credit, which I've done on Tesla, for a net debit, which I've done on Meta, which I've mitigated with another put. So that's kind of the summary of where we are. Bit of a longer video. There's some golden nuggets in there. Rewatch this. If this makes sense to you and you want to learn how to do this is how you properly manage these options. Not just accepting assignment at the 290 or at the 160 and Meta keeps dropping. You need to mitigate your risk somehow uh, by taking net debits. And that's one thing that I've learned in my history. I'm happy to take net debits and make a smaller gain. And again, it's a portfolio, right? This 651, I could have made 670 or whatever it was. What was Tesla? Tesla was 675, but I've still made money this week, even though I've taken a 250 loss on one. I'm still making money, and that's the piece that I'm trying to educate you guys on in terms of making money on a weekly basis. So I'll leave it there. If you've got any questions, let me know. I really hope you've enjoyed this video. As always, the rest of the playlist and the wheel strategy is on there for you guys, and I shall see you guys in the next video.